Hey, good morning, guys. I'm just calling. Well, I've been calling people. I decided to make a video. I thought it might be more efficient. So this is a printout of the Seattle Times article that was in the newspaper last night. Front page news: Seattle market is the fastest cooling real estate market in the country right now, and it's a little bit of a like sky is falling type of moment. So I just wanted to respond, let you know my thoughts and why this could be like a huge buying opportunity for us right now. So essentially, what they're saying is based on a variety of factors like days on market, how many people are having to drop prices, that type of a thing. The Seattle market has cooled off from its spring peak, right? Spring and fall are typically our strong markets here in Seattle with a lot of buy and sell activity. And spring was really great. We had the multiple offer situations. Everyone was running around like a chicken with their head cut off. We had to make offers that were really escalating, and a lot of first-time homebuyers were pushed out because they just did not have the cash to be able to compete with that market. In fact, we saw in some of the neighborhoods approximately a 20% rise in prices year over year for the last couple of years. Now that has changed primarily due to interest rates. So now we have the problem that in order to control inflation, the Fed has cranked up the interest rates to be really high, which is essentially making things less affordable for borrowers. So what used to cost $3,000 a month on the mortgage payment now costs $4,000 a month on the mortgage payment. And if you're really close to being able to afford or qualify to get into your first home, that makes a big difference, and you might be chunked, out of the race at this point. So that's reduced buyer demand. People are nervous. There's kind of this whole like, what's going on? We also have the factor of the stock markets having gone down, which makes people feel poorer. So we have these things going on. And as a result, homes are not selling as quickly as they have been. And we have dropped off our high prices in the spring. Now, this is not to say that we're falling off a cliff, but we are about to where we were at this time in 2021. So we've lost that year of growth. So if you are a seller right now, you're looking at prices from 6 months ago and you're saying, hey, comps are showing me these high prices, and I'm having a lot of conversations with seller, like actually here's the new price, the new value for your home. So things have come down quite a bit. Mortgage brokers are telling me that we may have one more Fed interest rate hike this year, but they are anticipating that to be pretty much done next year, and we may even see interest rates start coming back down once the Fed gets inflation under control. And if there is a recessionary talk, then usually they ease recession by lowering interest rates. So I can imagine when interest rates start coming back down again, our price growth will start going back. So here is the plan or the strategy for you if you're a buyer. You want to get into the market now while prices are low. There are some ways to do it more affordably, such as buying down the interest rate, which is where you or the seller of your house, which I'm seeing more and more frequently now, the seller pays a fee, some closing costs, $5,000 or $10,000 in some cases, to your lender in exchange for the lender lowering your interest rate for the first couple of years. So this will help make your payment more affordable for years 1 and 2, with the hope, the thought that you'll be able to refinance into a permanent 30-year fixed rate loan sometime during that period. Now, if that doesn't work, there is some risk, especially if interest rates continue to go up. So it would be good if you could actually afford to stay in the mortgage. Let's say it's that $4,000 a month payment. You want to be able to afford that worst case scenario if interest rates don't come back down. But it will help you get into the property. What do they say? There's a cute little mortgage broker saying, they say, marry the house, date the rate. So the idea is that you find the house you love, you get into it. Prices have come down right now. The market is soft. You have a lot more leverage as a buyer to get things like these interest rate buy downs, which can have more of an impact on your monthly payment than a lower price in many cases. You can get closing costs covered. You still can get inspections and all sorts of things. So, it's not a buyer's market, but you do have leverage and tools at your disposal that we haven't had for the last couple of years. So let's talk about this. If you're thinking about buying, if you were saying the market's too hot, I'm going to wait. This is your window. I think it'll be here this fall. I don't know that it will last until next spring. So if you've been thinking about doing something in the next 6 months or so, I think this is the time to do it. Let's talk about your options. Let's talk about your budget. Let's talk about your goals and your time frame. Okay, so thanks so much for watching. Don't panic. The sky is not falling. This is Seattle. We tend to do very well over time, although it's a shifting market. We've got to keep our eyes open and alert, paying attention to what's going on. That's what I'm here to help you do. So have a great week.